Warren Buffett gets a lot of criticism for his views on modern digital assets, such as cryptos and NFTs. He has called Bitcoin a worthless asset that doesn't produce anything and said he wouldn't buy all of the Bitcoin in the world for $25. Even when people were willing to pay up to $70K per coin and its total capitalization crossed the $1 trillion mark, Buffett still said the whole thing was nonsense. This isn't the first time he criticized a new emerging technology so badly. If you go back to the dot-com bubble, Warren held similar views about internet companies. His close friend Bill Gates tried multiple times to convince him to invest in tech companies such as Microsoft, but his answer was the same every single time. He has missed many great opportunities, from Amazon to Netflix to Tesla, and completely ignored the rise of the FANGs. Each of these stocks grew by a few thousand% at least. A $1,000 investment in Tesla when it went public would today be worth around $225,000. $5K investment would have made you $1 million. A few $1 million investments into these companies would be worth at least hundreds of millions of dollars. Despite the fact that he has passed on so many opportunities, his net worth is still over $100 billion at a time when the entire economy is falling into a recession and the stock market is plummeting. In fact, during the last recession back in 2008, he was even named the richest person in the world, surpassing even Bill Gates. But besides crypto, tech, and NFTs, there is another industry Warren Buffett has always avoided. That's right, the housing market. Believe it or not, Warren Buffett never invests in real estate. The only real estate he has ever purchased is the house he bought in 1958 in Omaha, Nebraska for $31,500, the equivalent of roughly $285,000 in 2020 dollars, where he has lived since then. So the natural question is, why does the most successful investor in history never invest in real estate? Why does he avoid real estate even though real estate is the safest investment out there? Does Warren Buffett know something that we don't? We will answer all of these questions and many more, but before we do that, give this video a thumbs up, subscribe to our channel, and let's find out together.
We both had a fair amount of experience in real estate, and Charlie made his early money in real estate. The second point is the more important point. Real estate is not a commodity, but I think it tends to be more accurately priced, particularly developed real estate, more accurately priced most of the time. Now, during the RTC period, when you had huge amounts of transactions and you had an owner that didn't want to be an owner in a very big way and they didn't know what the hell they owned and all of that sort of thing. I mean, you had a lot of mispricing then, and I know a few people in this room that made a lot of money off of that. But under most conditions, it's hard to find real estate that's really mispriced. I mean, when I look at the transactions that REITs engage in currently, and you get a lot of information on that sort of thing, you know, they're very similar, but it's a competitive world, and you know, they all know about what a Class A office building in Chicago or wherever it may be is going to produce. So at least they may all be wrong, as it turns out, because of some unusual events, but it's hard to argue with the current conventional wisdom most of the time in the real estate world. But occasionally there have been some, you know, there could be big opportunities in the field, but if they exist, it will certainly be because there'll be a lot of chaos in real estate financing for one reason or another. We've done some real estate financing, and you have to have the money shut off to quite a degree, probably to get any big mispricing across the board.
You can criticize Warren Buffett's investment strategies as much as you want, but that's not going to change the fact that his commitment to his mission led him to outperform the S&P 500 by 84% over the last 20 years, and made him the most successful investor of all time. He has been in the stock market for many decades, and he has continuously made successful investments. Warren Buffett was once asked what he thinks about buying a house. His response was firm and straightforward. Buy a house if you know you were going to stay in one area for a long time. In fact, he said, a 30-year mortgage is the best instrument in the world. If it's such a great investment, why does he always avoid real estate, even when the housing bubble collapsed? Buffett was sitting on an enormous pile of cash and knew that the housing market could climb sooner or later, so why didn't he invest in real estate? There are many reasons. Let's start with the first one. Investing in real estate is unlike investing in the stock market. Managing a property is a full-time business. Maybe one property isn't a big deal, especially when it's just a side hustle, but the moment it turns into multiple properties, it's a full-time business. Just because you have a property doesn't mean you will always be able to find tenants or rent it out, but you still have to keep making your mortgage payments. Secondly, something always breaks down. A property needs to be taken care of, and during crises, you might not be able to rent it out for a longer period. That doesn't mean it's a bad business. It just means it is a business, which means you have to spend an equal amount of time managing it. That's why Warren Buffett never went into real estate, since he knows that his time is limited, and getting into real estate meant that he would have much less time to look for greater investments. To be clear, Warren Buffett invested in real estate throughout his career, but he mostly invested in REITs over the years. In fact, he currently owns a large stake in Store Capital Corp. It is a publicly traded American real estate investment trust, an investment fund that invests in real estate. Investing in them is like investing in stocks. The second reason why Buffett avoids real estate is because of how difficult it is to find a good deal in the market. Here's how you make a great investment. You have to find a great business that's inaccurately priced lower than it actually costs for one reason or another. It could be a business that has a perfect foundation that can easily scale, or it might have developed a technology that will bring massive profits once it's produced at massive levels. The stock market is filled with inaccurately priced stocks, especially during a crisis. When people panic and start selling, the sell-off crashes prices. Interest rate hikes scare off investors, for example, and they start massively selling off their stocks to the point where Apple stock, for instance, fell by around 25% from April to June. Did Apple lose a quarter of its workforce in a few months? Did its sales drop by 25% in a few months? No! The panic drove the market down. So even great business suffered. That's why it's much easier to find a great deal in the stock market than in real estate. First of all, prices in real estate don't fluctuate that fast. Yes, we have real estate crashes from time to time, but they happen once in 1 or 2 decades. And if there is a great deal in the market, a real estate agent in the area may likely close the deal for himself before everyone else finds out. We don't have a real estate exchange as we do for stocks that allows you to go through multiple properties from the comfort of your office. Because unlike real estate, companies have to go through a lengthy and harsh process of getting approved to be able to list their stocks in the stock market. They are also required to publish their financial statements every quarter, which makes it possible for Buffett to have a competitive advantage when finding great deals in the market. Real estate doesn't produce much. It provides you with a roof over your head, and that's it. Yes, it can be a better roof, but how many people are willing to pay $10,000 per night? However, a business can scale up its operations and grow infinitely. Buffett acquired 5% of Apple in 2018 for $36 billion. In a couple of years, when Apple crossed the $3 trillion market, his stake grew to $160 billion, and he has also enjoyed regular dividends from Apple, averaging about $775 million annually. There was no way he could have pulled something like that off in real estate. And that's not even his best deal. Buffett paid $25 million for See's Candy Company in 1972, and it has returned $1.35 billion to Berkshire ever since. Even when factoring in the $32 million Berkshire has invested into the business over the years, this is an extraordinary return on investment.
Yeah, we don't have any competitive advantage over experienced real estate investors in the field, and we wouldn't have if we were operating with our own money as a partnership. And if you operate as a corporation such as ours, which is taxable under Chapter C of the Internal Revenue Code, you get a whole layer of corporate taxes between the real estate income and the use of the income by the people who own the real estate. By its nature, real estate tends to be a very lousy investment for people who are taxed under Subchapter C of the code relating to corporations. The combination of having it generally a lousy activity for people with our tax structure and having no special competence in the field means that we spend almost no time thinking about anything in real estate, and then such real estate as we've actually done, like holding surplus real estate and trying to sell it off, I'd say we have a poor record at it.
The third reason is that there is just more money in the stock market than in real estate. It's a plain fact. The United States real estate market is around $3.7 trillion as of 2021. On the other hand, the stock market is around $93 trillion. The housing market is a fraction of the stock market. That's why there is not a single real estate investor in the top 10 richest people in the world. All of them have invented something or started some kind of business. In fact, the richest real estate investor is Shao Qi, a 91-year-old real estate magnate who is the 29th richest person in the world with a $28.6 billion net worth. He's not just an investor, he is a real estate developer based in Hong Kong. The richest real estate developer in the US is Donald Bren, with a net worth of just $17 billion. Despite all the opportunities in the stock market, Buffett is aiming to take the best advantage of his time and skills. If he can make over $100 billion by investing in the stock market, why go to real estate? What made him so successful in the first place was his commitment to his strategies and principles. He never jumps to different assets just because it's hyped. Maybe that's the most important lesson we can learn from him. Buying a house is a great decision if you are planning to stay somewhere for a long time, but getting into real estate is a business, and the question is, do you want to start such a business? If the answer is no because you are in a different business, there is no point in getting yourself into a business in which you are neither competent or passionate. What about you? Do you agree with Buffett's aversion to the property market? How do you think this is the best way to make property investing as successful as stock investing? Let us know right now in the comment section below. Make sure you like this video, subscribe to our channel, and hit that bell icon for future updates to the #1 finance channel on the line.